Hello, can you guys hear me? Hello, can you guys hear me? Hello, can you guys hear me? Can you hear me? If you can hear me, put 7 in the chat. Good, good, good. Nice, 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 nice. How are you guys doing today? How are you doing? Thanks, JD. So NY session is opening in about 23 minutes. The NY market open, the equities opening in about 23 minutes. 23 minutes rather. 23 minutes. So a lot of movement happened during the London session today. So I'm got me wondering what's really gonna happen in NY session because a lot of things have happened already in the New York session. And what I was looking like a drawn liquidity on NAS100 has already been met on has already been met before the New York Open. So I don't know. I would have looked for an entry through that. But let me run you guys through on what happened. Let me run you guys through on what happened. So I'm gonna put the stuff on right now. All right. So this is the 1 day fair value gap on NAS100. Let me take this out. So there's the 1 day fair value gap that I showed you guys in the weekly analysis video if you watched. I targeted this order block here, then also this high right here, and the both of them got met. But my overall target was this. But I'm likely right now I'm not really gonna consign that target any longer that much because for some reason price might not actually reach there any longer because of what I'm seeing on S&P 500. Let me show you guys what I'm seeing on S&P 500 first. So S&P 500 comes into this 1 day fair value gap right here in premium, like I told you guys earlier. S&P 500 comes into this 1 day fair value gap in premium. Now we look to sell from premium. So this 1 day fair value gap in here is a very valid zone to sell from. So if I was like a swing trader and I was fully bearish on S&P 500, I was a single position trader, this is what I would actually do. I would set my sell right there, my stop loss above this high right here. That high is what I call my internal energetic swing. And then I'll be targeting here. But we don't actually trade like that. Well, me, I don't actually trade like that. I don't know about you. I'm an intraday stroke intraday trader. So I actually don't look to buy from a 1 day fair value gap. That's too much for me. I can't wait. I don't have that patience. So rather what I'll do is I'll let price get into here. Then I'll look for an entry there. Then let me show you guys what happened yesterday. Let's take this out now. Hold on. Let me extend this. Hope you guys can still hear me. Put 7 in the chat. I just want to be sure. If you guys can still hear me, just put 7 in the chat. I want to be sure. Nice, 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 nice. That's good. All right. So on S&P 500, right? See what see what happened on S&P 500. Price comes into the 1 day fair value gap, runs above these highs on Tuesday with market the equity market open. With NY open, market runs above these highs, creates the high of the day, which is possibly the high of the week also, because the high of the week is most likely going to form on the Tuesday. The highs and the lows of the week will most likely form on the Tuesday. So this is possibly the high of the week also. So tapped into the 50% level of the fair value gap, came down here and broke this low. This was a shift to market structure. So it takes out buy side liquidity and breaks this low, which is a shift to market structure. If you can look in here, there's a 1 hour fair value gap. Hold on. Yes. There's a 1 hour fair value gap in there if you can look in there. So price comes back, taps into it. As you can see, it respects it. There's an order block in here. This is the lower part of the order block. There's the lower part of the order block from these opening. Excuse me. This laptop's bugging. Alright, so price taps into the order block, as you can see. Taps into the fair value gap and order block. If you are actually looking for sales in S&P 500, and this was a very good thing to do, like you could sell from there. Comes back into the order block again and the fair value gap. Maybe your stops above here. Target wherever you want to target. But this is too much for me. My drawn liquidity would have been this daily fair value gap in here. So it wouldn't have given me like a 1 to 2. So I don't think I would have done that personally. 1 to 2 is the least risk to reward ratio I can take. Another thing it does, it comes back, taps into here, this breaker, as you can see. I marked this breaker yesterday. And I saw price run into it. But I was looking for sales on NAS100, but I couldn't get the sales until I noticed something that I didn't actually take note of on NAS100 earlier. On NAS100, going into those same spots, you can see something. Hold on, let me go to the 1 hour time frame. Similar thing happens on NAS100. Now, let me show you guys something. If you check in here, you're going to see like a fair value gap, right? From this low, hold on. From this low right here to here, there's a fair value gap. Let me show you that how that affects us. So price comes back into the fair value gap and offers buy side. It's not yet rebalanced. It then comes down and offers sell side. Now this range from here to here, this fair value gap is now a balanced range. Right? It's now a balanced range. So we don't expect price. If price actually wants to go up, we don't expect price to break through it any longer. So the fact that price broke through this fair value gap right here, which is a balanced range, and a balanced range is meant to hold price in whatever direction price is trying to go. So the fact that this balanced range couldn't hold price any longer, this shows that there was a real shift market structure and price wasn't actually going up, because I was thinking maybe we want to reach here. But the fact that I was seeing the same thing happening on S&P 500, I was like, no, maybe we're not going to reach there. Price was actually respecting this daily order block in here, the open price. Price respected that open price by taking out buy side liquidity. And also, if you can see in here, price also moved into this daily fair value gap in here already. So you can say that's already tapped in to the daily fair value gap, which I don't think happened on S&P 500. Yeah, it never happened on S&P 500. But you can say price has already tapped into the daily fair value gap on NAS100. So for some reason, they might not really want to go there. Let me take this out now. Now I was looking for sales because I want to show you guys something else. Now, like I told you guys, this is a balanced price range. That's the same reason why price couldn't go up further than this. As you can see, price drops down, had another shift to market structure right here, comes back in. It couldn't go further than this. I was thinking maybe if we want to go in here, that was before I noticed this because I didn't take notice of this earlier. But actually, after I actually saw this, then I knew that yes, this was the reason why price didn't go up. So this balanced price range right here still sounds like a block. It's just like a breaker. A breaker is like a bullish, a bearish breaker is like a bullish order block, right? That got broken through. So the same thing we hear. This was meant to hold price up, but the fact it got broken through, you can use it as somewhat like a resistance if you're a retail trader. Somewhat like a resistance to hold price. As you can see, price didn't break through it because it's a block. So that's the reason why price didn't break through there. And also, if you can look into there, you can see this 1 hour fair value gap too inside that zone. And make that 1 hour fair value gap. So today price finally goes down into this daily fair value gap, which was margin on liquidity. Now I'm also going to tell you why it's margin on liquidity. Hold on. It's margin on liquidity for this reason, because if you check this dealing range here, this is a dealing range, right? That we are working with. Price takes out sell side liquidity here and takes out buy side liquidity. So we have a dealing range from this low to this high. Now, if we are still being bullish, we don't expect this low to get taken out, right? And also, what low do we not expect to get taken out? We don't expect this other low right here to get taken out because that's our internal energetic swing. Now I go more in depth to premium members, but doesn't matter. I'm still going to show you everything. So in case you don't really understand it, let me just tell you what an internal energetic swing is. An internal energetic swing is like a swing high or a swing low that got formed inside the dealing range, and we don't expect it to get taken out. Why? Because that's swing high or swing low has already covered up and balanced all ranges inside the dealing range. So we don't expect price to go above or below that. Now, in this case, this is the internal energetic swing low. Now, in this internal energetic swing low, an internal energetic swing has three criteria. It must be energetic, as you can see. This move right here is very energetic, very sharp move. It must be a dealing range in the lower time frame. Now, if we move into the 1 hour time frame, you can see this low right here is a dealing range. Why? Because it takes out sell side liquidity and buy side liquidity. So this is also a dealing range in lower time frame. Then the third criteria is it must be formed before the opposite liquidity gets taken out. Now, sell side had been taken out. The opposite liquidity was buy side. So it got formed before buy side got taken out. So I wouldn't expect this low to get taken out if we are bullish. Now, if this low gets taken out, that's enough reason for you to know that this low is most likely going to get taken out. And then finally this low. But right now, I don't really care much about that. What I'm actually looking at is if price is going to come into discount. Price has already tapped into the 1 day fair value gap. So this discount is right here. So this is where I'm going to be targeting, right? I'm going to see if price will actually want to come to discount. Because price moves from premium to discount, buy side to sell side. We've been in premium, so I want to see price drop into discounts. Hold on. I want to see price drop into discounts. Yeah. So that will be somewhere like my drawn liquidity. Price dropping into discounts. Then maybe eventually the 50% range. 50% range of this full daily fair value gap in here. Which is 1 hour fair value gap resides in. So let's drop to the 1 hour fair value, the 1 hour time frame. In the 1 hour time frame, you can see 1 hour fair value gap, which resides just below the 50% of this 1 day fair value gap. Market just opened, equity markets. You see this other block in here, the 50% of this other block also rhymes with the 50% of our full daily range. So it makes sense for price to want to drop in there. That's what price is that? That's around 11430. So I've been expecting price to get to 11430. Consequently, then what other place would I be expecting price to want to drop into? Let me show you guys something else. This is something I learned from ICT. So none of this is mine. I learned from ICT, the NAS100 trader. Look at this. You see from this range from here to here, using the Fibonacci, using the Fib, can see something. Hold on. Let me draw that 50% back. Chart is a little bit messy now. Yeah. So we use the bodies of this here and the lowest body right here. As you can see, so from here to here is a range on its own. So we do it by checking like a swing point. In this case, this was a swing point from here to here. As you can see, price going back up. So we do it like this, from here to here. You count it. From here to here to the 1 to the -1 is equal range. Then if you add if you add that same range again, then it gets to -2. As you can see, that does the -2. And then the -2 ends at this 50% of this daily range, and also close to our 1 hour fair value gap. So this is the zone that I'm also looking at. And also, if they want to go up, they might just use this daily fair value gap and keep on going up. Maybe attacked by side liquidity over here. So nothing is 100% certain. Now let's go straight into the day. Today, like I said, let me show you how I mark my chart. So this is NY midnight open price. This is NY midnight open price. Go into the 15 minutes time frame. This 8:30 a.m. open price. This 9:30 a.m. open price. So we have a daily range from here, taking the 1 hour favorite gap. This is somewhat like equal highs, relative equal highs. But if they actually want to go down, because how balanced this range is from what I showed you earlier, I don't think they were gonna take out those highs. Very unlikely to happen if they actually want to go down. So let's say they actually want to go into premium. We have this 15 minutes fair value gap in here in premium. Right here in premium. Plus little buy side liquidity rest in there. So if they have like a premium, like a extreme retracement, you can see a run into this before price goes down. But if we see no extreme retracement, then this is on 15 minutes, other 15 minutes fair value gap in here is just most likely going to hold. And it's going to be above NY open price. It's going to be above the 8:30 a.m. open price. So we might see maybe a run up here. If they want to go down today, then there's an order block in there too. There's a low order block in there. So let's say no extreme retracement. 9:30 a.m. open. There's a buy side liquidity resting over here. So we might have a run above the buy side. There's an order blocking here. So this is something you're not really going to like. You're not really going to trust that much. Right now, I'm not really even looking for any entries or whatever. Because price has already gotten into the daily fair value gap. That would have been my drawn liquidity. I don't like to see that at all. Price has already gotten there. For the fact that price has gotten there already, I wouldn't want to be a heavy seller because that would have been my target and my reason to be confident in my sales, because I know for a fact that if they broke in certain zones that like I showed you guys earlier, then this is where they are most likely targeting. But we've already gotten there. So they can either choose to go to those zones I showed you guys now or keep on going up from here. So that's why I wouldn't even be looking for any sales right now. NAS100. Because like I showed you guys, relative equal highs are here. So right now, this is very low probability for me. I wouldn't be heavily looking for any sales right now on NAS100 or whatever. But this is something I can just take a look at and be noticing. Like I can be I can be checking to see if something comes up. Like I showed you guys, if I see further bearish movements, then these zones in here that I showed you guys are valid zones to target. Yeah, and the 50% of the daily fair value gap. So discount is right here, and the 50% of the daily fair value gap is just above this 1 hour fair value gap. This object is just above this 1 hour fair value gap. So these are the things that I'll be targeting if I see bearish more bearish movements. But currently, I'm not really going to be chasing anything at all. I'm not going to be heavily looking for sales. And also from the 1 hour time frame, you can see another favorite gap in here. So these are valid zones price might want to go from. This right here is partial liquidity. Excuse me. I think this high right here is gonna get taken out. I'm not really trading it, but I think it's gonna get taken out. If they really want to go up to these zones, go into premium first, then I think the high might get taken out. Check S&P 500. This 4 hours favorite gap in here just got tapped into on US30. And I'm seeing something here in US30. 1, 2, 3. 3, 1, 2, 3. Taps into the 1 hour favorite gap. While taking our sell side liquidity internally. Like I said, this is a daily range on it, so that's also 1 hour favorite gap. Okay. Okay. It takes our sell side liquidity 1, engineered 2, 3. I won't lie to you guys. I can't be taking any trade currently. It doesn't look clear. Oh, still looking a little bit bullish. It's not really clear. I would like to see certain things happen for me to be fully sure they really want to go down. Buy side, sell side, taps into 1 hour favorite gap. Yeah. As you can see, buy side got raided, shift to market structure. Same thing, taps into 1 hour favorite gap and it drops down. Taking out sell side here. So let's Let's see how price moves. If I can see price respect either this 1 hour fair value gap in here, maybe the extreme one up there. If I was selling, I'll be looking for sales in here. Then lastly in here to take out this lower here. That high that I said is gonna get taken out on NAS100 just got taken out. So buy side liquidity being raided. Now what's gonna be next sell side? It could be one of these lows in here, whatever lows gets formed of this low we are here. If we're being bearish. So that has been raided. It's tapping into the 50-minute fair value gap right now. If I see anything good form on the anything nice form on the lower time frames, like the 1 minute time frame, I might just paper trade it. So buy side has been raided. We are trying to tap into this. So this is the second target. Let's see if it gets tapped into. Similar thing right here too. 50% of the daily fair value gap. We have a 1 hour fair value. We have a 1 hour fair value gap in there too. Just next to it. So I'm not really trading today. Like I told you guys earlier, give you my reasons why I'm not trading. It's not really looking like high probability to me. My drawn liquidity has already been met. So I'd like to see what happens next. Then I'm gonna be targeting. If they show various signs, then I'm gonna be targeting these zones that I showed you guys. So yeah, I'm gonna be ending the live stream now. This is my first live stream. I was just testing it out and seeing what I can come up with. Hope you guys enjoyed it. Let's see if the 15-minute fair gap get run into. Okay, so I just noticed there's also 1 hour fair value gap in here. The price is already met. So in case it keeps on going down from here, targeting these lows without tapping into the 50-minute fair value gap, then it makes sense why I didn't tap into it. Taps into the 9:30 a.m. As you can see, look at the way it goes up after tapping into it. Just like it came down to tap into it first. Taps into the 9:30 a.m. open price. Was that the 9:30 a.m.? Sorry, the 8:30 a.m. open price. And has a reaction from it. There's a 5-minute fair value gap in here. If they want to actually still go up, then to tap into the 15-minute fair value gap, then they might just run into these and go up. But like I said, if they actually want to go down, and this is the external range sell side liquidity, then they've already tapped into 1 hour fair value gap they can use. If this low right here gets taken out, then I don't think they will want to go up any longer. I expect this low right here to hold price. This is a very balanced range. And also these are dealing range in lower time frame. Takes out sell side and buy side. So this is a very valid low. And we can call this the internal energetic swing of this dealing range. So these two lows right here, if you're still going up into the 15-minute fair value gap, I don't expect these two lows right here to get taken out. Let's see what happens. If it gets taken out, then yeah, there's enough reasons for you to know that these should be next. Because buy side to sell side. Buy side, sell side, you get internal range. Like this is internal range sell side. You can also call these lows internal range sell side. But these are the kind of lows I don't expect to get taken out. But this right here is an internal range sell side. Then the external range sell side is this. So what pair Tell me in the chat, what pair do you actually trade? Do you trade NAS100, US30, S&P 500, or something else? Tell me in the chat. Oh, and the Boateng, you trade NAS100 just like me. That's nice. So that means what I'm saying right now actually applies to you. So look, let me show you something. Like I said, the market moves from daily range to daily range. So right here, this is a daily range on its own. Let me show you why this is a daily range. So this is something I do in the lower time frames a lot. I'm trading in the lower time frames. Excuse me. All right. So this is the daily range for this reason. So I got ready here in buy side, which is up here, or you can use this as the sell side, or this doesn't matter. So price actually takes our sell side, takes our buy side. Like I said, sell side is next. It's either internal range sell side like this, which has already been taken, or external range buy side like this low right here. We expect to hold price if price is actually going up. But in this case, this already is a new dealing range. So if this 1 hour fair value gap here was going to hold price and this right here was the target, not this, and this is a dealing range you can work with. You can see buy side got rated here and here, sell side here. That's a new dealing range for you. There's a 1 minute fair value gap over here. And this right here is somewhat like another block. So this can also hold price up here to this 1 minute fair value gap. So where are you guys from? Tell me where you from in the chat. What country are you from? Like where you watching this live stream from? If it takes out this low right here, then I would have been confident in it going up any longer. It takes out that low, I don't expect it to go up any longer. This first lower red line. Like I told you, that low right there is a strong low because it's a daily range. Sell side, it took out sell side, and it took out buy side. It took out sell side, and also it led to the taking out of buy side. That's a daily range on its own. So that's this low right is very strong low. So if it gets taken out, then price is most likely going to attack the external range sell side liquidity and not actually going up any longer. So let's see actually what happens. The 1 minute fair value gap has been formed inside here. Tapping into it right now. There's a little shift in market structure. So this could be either a shift in market structure or a run above buy side liquidity. So if we are looking for buys and we're expecting this low to hold, this can be a shift in market structure. But if this low is actually going to get taken out, this is a run above buy side liquidity into premium. This is why a lot of people get confused. All right, it's going up now from the 1 minute fair value gap that I outlined. Hold on, let me mark it for you guys to see too. So I think it's trying to tap into the other 1 minute fair value gap up there. Yes, it's tapped into it. So if like I told you guys earlier, it's tapped into a 1 hour fair value gap in here already. So if this was actually a move to go down, this would be a good zone to take sales from. But right now, like I told you guys earlier, I'm not actually trading, so I can't really talk much on this. Personally, I don't think it's going to go down, but I might be wrong. Personally, I think from what I'm seeing, the movement that I'm seeing right now, I think they want to go up. But it's like a 50-50 at the same time. Not really too concise. Because if you check in the 15 minutes time frame, this was just price tapping into a 15 minutes fair value gap in here after running above buy side liquidity, like a shift. You can call this a shift to market structure, run into discount 15 minutes fair value gap to keep on going up. But it's somewhere like a 50-50, so I wouldn't even be taking any trade personally. I wanna see it gets clear, like it's most likely pointing out to one side than the other. But at this point it's like a 50-50 to me. Andy, can you like tell me the price points you're talking about? The particular one the one I avoid. Let me get into the other. Some of the charts. This particular chart is a Honda chart, so you wouldn't see any voids in here. Let me get into the Pepperstone charts. That's a little bit messy. One 1167.4.9. Hold on, let me check it out. 1167.4.9. So you're talking about this particular one in here. No, I want this chart to be a little bit naked. Let me go to the other chart. You're talking about this 1 hour fair value gap in here where I also have a 15 minute fair value gap. All right, all right. So if they actually want to go up and have like an extreme retracement, then we can see these zones here, no holding price or whatever. Then we might see price running above this buy side liquidity here, tapping into this. Then lastly this. But anything above this, then they might just want to go up. Equal lows resting here, equal highs rather, resting above there. Same reason why I'm not comfortable taking any sales right now. Those are equal highs. Of course, I know, yes, that's the balanced price range. And as you can see, the opening gap, the upper bound of the opening gap, the weekly opening gap, the lower bound, this extended lines in here. And also, like I showed you guys, we had a 1 hour fair value gap, like a balanced price range here. Balanced price range because buy side was offered and sell side was offered. So this is a balanced price range here. Same reason why this price couldn't break through it and be going extremely up, happening to make this other blocks in here, because this was a balanced price range. So for the same reason, yeah, if we're actually going down, then I don't expect these highs to get taken out. But at the same time, I don't just trust those highs. I won't be comfortable putting my stop loss above those highs. Because normally if I was buying this market, I'll be targeting those highs. I'll be targeting equal highs. I can't I can't trust equal highs to put my stop loss in. So I'd rather look for other things to show up in this market. If I see reasons like them actually wanting to go down, then fine. I have zones that I'll be targeting. Like I showed you guys earlier. But for now, no, not taking any trade. Ready to sit it out. It's not looking clear to me right now. All right, let me look at US30. Ferdinand Daniels. I'll be looking at US30 now. So, excuse me, let me take this out. So, on US30, if you watch the weekly analysis video that I sent out, in the weekly analysis video, we had this 1 hour fair value gap right here, but I got it deleted because price has tapped into the extreme one, the 4 hours fair value gap. This is the 4 hours fair value gap. Like I told you guys, I would have been expecting these highs to get taken out, right? Like yeah, if I was trading US30 alone, I'll be expecting those highs to get taken out because most of the zones that I would have expected US30 to hold to like hold US30 to go down, most of those zones have been taken out. Now, one of those zones is this. Let me show you the zones. The first zone that I would have expected price to hold in US30 and no breakthrough was this. This is what I call the internal energetic swing, like I explained for you guys earlier in the video in this live stream. I told you guys the internal energetic swing must have three criteria. It must be energetic one, as you can see. The price movement from this, you see, just one day took out 1, 2, 3. Okay, almost took out the 4 days. So just one day took out 4 days lows. So that's a very energetic day. So it matches the criteria of it being energetic. Then the second criteria is it must be a daily range in the lower time frame. Now in the lower time frame, if you can look at this, you're gonna see sell side got rated here, buy side got rated here. External sell side is this. So once an external range liquidity has been taken out, a new daily range is formed. So external range gets taken out right here. So a new daily range is formed. That means this high main market for you. So this is the way I look at price. This high, excuse me. And this low becomes a new daily range. Buy side, sell side. So that's a very valid zone. So that's the second criteria. It must be a daily range, a lower time frame. So the first criteria I told you guys was it must be energetic. Second, must be a daily range, lower time frame. Then third, it must form before the opposite liquidity gets taken out. In this case, buy side was taken out. The opposite liquidity was sell side, and this formed before sell side got taken out. So this is my internal energetic swing. Now, one price reached here, I would have expected price to hold. I don't expect the internal. Once an internal energetic swing gets taken out, there's a likelihood, there's a very high probability chance that the main highs or the lows of the daily range won't hold any longer. In this case, it's this. So this got taken out. Then lastly, I would have expected this to hold if this didn't hold. And as you can see, we had a little bit of reaction from it. The once price tapped into this other block, we had a little bit of reaction, but nothing. So I'll be looking for buys personally on your steady if I traded it alone. But from what I'm seeing on S&P 500 and NAS100, it's making my buyers a little bit shaky. So as you can see, price drops here, creates a new daily range here. So we're going to draw a fee from here to here. This 1 hour fair value gap is not truly an inside on premium. It's not really into premium. It's not really above premium. But yeah, some part of it is in discount, some in premium. I would have liked it if it was really above premium. But let's say price is in discount and would likely want to go to premium, right? So this 1 hour fair value gap is a nice target for S&P 500. Now in this case, price run below sell side here, runs above buy side, and new daily range to the lower time frame. Creates a fair value gap in the 5 minutes time frame. So if I was looking for buys on US30, the fact that this fair value gap was too large, I might have refined my entry a little bit to maybe the 50%. Yeah, as you can see, price taps into the 50% clean, 50% of this 5 minutes fair value gap and starts running up immediately. So personally for me, if I was trading this, I would have most likely put my entry here. But I don't trade US30, then I would have expected this low to not get taken out because this is somewhat like an internal energetic swing. You can see it. If you go into the 1 minute time frame, you're going to see it matches all criteria. Takes out sell side here, taps into fair value gap in here, takes out buy side. So this is the dealing range. It got formed before deposit liquidity gets taken out. And also it what else does it do? It's energetic. So this is my internal energetic swing I wouldn't expect to get taken out. So if I was trading US30, then yes, I would have been entering that zone, maybe targeting this 1 hour fair value gap around the 1 to 2. So that 1 hour fair value gap is something that's most likely going to get hit on US30. So that's for you, Ferdinand Daniels. 1 hour fair value gap. Let's get back to NAS100. Okay. All right. Like I told you guys, if they actually want to go up, this low is most likely not going to get taken out. As you can see, this low didn't get taken out. I just knew that low was most likely not going to get taken out if they really wanted to go up. And it didn't get taken out. Because see, surprise right now is here and it's approaching that zone and the board thing you told me about. So let's see if this 1 minute this 1 hour fair value this 1 hour order block rather is going to hold price. It might or it might not. So that's why I don't really trust that 1 hour fair value gap he showed me, because this other block might just want to hold it. But let's see what happens. Excuse me. All right. So let's see what happens right here. So this right here is the daily range already on its own. And this is the internal energetic swing of this daily range. So if I was actually buying these, let me say I wanted to be a buyer and I buy from this fair value gap in here. This 3 minute fair value gap in here. Targeting that 1 hour fair value gap in there. Then my stops will be below this. So let's say I was doing this. And this is my target. Looks like it's running to that 1 hour fair value, the 15 minute fair value gap, which is also 1 hour fair value gap. Looks like it's running there. In case you're confused what those lines are, this is the opening price of this 1 hour order block. Then this right here is the opening price of the 15 minutes order block. So price has tapped into the two of them. Let me take the 15 minutes order block out. We're going to use just the 1 hour. And premium is just here. So price will most likely run above these highs if this order block don't hold to tap into premium. Then if we actually, those sales that are looking like they want to happen, then it can either happen from this 15 minutes fair value gap here or this other 1 hour fair value gap here. Now that 1 hour fair value gap looks interesting. Why? It's interesting because price actually, because that 1 hour order block and that 1 hour fair value gap matches with the midnight open, and the midnight open is also an order block. This is also a series of order block that the opening price. The order blocks can be one candle or they can be more than one candle. So in this case, these 1, 2, 3 are order blocks because these are series of up candles, right? Took our buy side liquidity here. So this 1 hour fair value gap in here is looking very interesting. And personally for me, if I was selling this market today and I see an extreme run into those highs right there, then this would have been like a good zone for me to sell from. But those are equal highs, so I don't trust it to put my stop loss above it. Targeting just a 1 to 2. So that's why I'm not really taking any trade today. So you guys, thanks for watching. Thanks for staying with me.